Hey, it's Clay Trader, and this will be a video chart on ticker symbol EMG. We will take a look at the 15-minute time frame. Real quick, what do I mean by 15-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 15 minutes. So all this here may look like a few weeks worth of time. It's actually just today's price action broken down into 15-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price and makes mapping out where levels of support and resistance easier to see. Not to state the obvious or rub salt in anyone's wounds, but today was pretty brutal. Big old nasty move here, and then to give some credit where credit's due, the bulls did show some signs of strength via at least going sideways. You may be thinking, well, geez, that's setting the bar kind of low if you're calling sideways action bullish. Well, I mean, again, you got to keep in mind the context. The context of the situation is the price was getting absolutely hammered. So, yeah, going sideways, some sort of bullishness. Now, just because it's some sort of bullishness is not the same as, so therefore this is guaranteed to bounce up to $1.50 tomorrow. I'm not saying that. I wish the market was that easy, but no such thing as a guarantee. My point here is just that the bulls finally did start to step in, and I want to define step in as this first point of support right here at the 68-cent mark. You can see on numerous occasions throughout the course of the day, the price was just hovering right down there around that 68-cent level, quite a bit. And so far, so good. The price is holding. And, that brings up a very logical question. Can this price continue to hold? So far, so good. Yes, there are buyers there. But just because there's buyers there, today doesn't mean that there's a guarantee that there's going to be continued people that want to buy. But as it stands right now, people are finding enough value to want to put some money into the stock at 68 cents. So that's, sign of strength in the sense of, all right, the bulls have at least stopped the bleeding. Now, whether or not the bleeding, continues tomorrow, we shall see. But the one thing that really sticks out to me is just the overall bearish pattern here, which would be known as a bear pennant. So let me draw that right there. So for you golfers out there, bear pennant is just like an upside down pennant. So there's the golf hole up there. But bear pennant would be, if you just say, Clay, summarize this for me very quickly, I'd say 15-minute time frame, bear pennant pattern. 68 cents is, that key support where if the price can't hold above there, then it would not be shocking at all to see the price, take another pretty big chunk to the downside. But again, as it stands right now, 68 cents is holding as support. So we'll see what happens with it. On any sort of bounce, key level that, the price is going to need to get back above is 75 cents. But at this point, breaking levels of resistance, not really a top priority. Top priority for the bulls, at least, is, finding some sort of true bottom and stabilizing the price. So we'll see what happens with it. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.